Awesome. What is up, guys? This is going to be a live trade recap. So instead of doing a recorded version, I'm just going to do a live version with you guys just to go over a couple trades today and a couple important subjects that I want to touch on, and hopefully it will help your trading. First off, we're going to be going over the puts that were taken today in the what was about Discord, right? So we took puts at open on QQQ. So what I want to know is what we always want to look at is at the higher time frames. Like, what are the higher time frames looking like? What is going on there? Well, from Sunday's watch, right? Put into the watch, watching 428, 430 to reject as supply, right? So we could see here we had one, two, three, four touches right here into supply. Can't get over, right? 420 between 428 and 430, we can see that there is some heavy supply. Now we had a V-shaped recovery back into it, but that's still supply until we break over this 430 level. So coming in today, what I was looking at was, an initial reject here. If we do get weak, then I am going to look short to take the short trade, right? Explain this on Sunday watch. If we do get weak, looking to take the short trade at open. So great. What is happening at open today? At open, what do we have? We had selling, right? That should go down. We had some selling occur at open, right? So we opened up lower high, we broke up, and then we just started selling. Now, if you're going to play QQQ and you're going to play SPY, what do we need to look at? Well, we need to look at the top holdings. So this is a chart. This is what I look at every single day. I know it could seem messy to you. To me, it's not. Looking at Apple, Microsoft, Tesla, Amazon, Google, AMD, NVIDIA, Meta, then a couple other different names that I'm just watching to take trades on as well. We have SPY, QQQ, right? So what were we seeing at open? What were we seeing at open today? Well, we had Apple selling off. We had Microsoft selling off. We had Tesla selling off. We had Amazon selling off. We had Google selling off. AMD selling off, right? So we have Meta selling off. We have the top holdings of both SPY and QQQ selling off, right? Tech was extremely weak this morning. Nothing but sells coming through. Market was weak, right? I mean, you could see it clear as day across the market from Apple, Microsoft, Tesla. Everything was selling, right? We were at a very, very weak open. Now, coming into QQQ, you could see that clear as day as well. And we had a couple data prints today. We had one at 15 minutes in the open. We had one at 30 minutes in the open. So here's 30 minutes in the open. We started selling, right? And we had a continuation sell down to these lows here at 425. So a couple things I'm looking for in these sells. One, I'm looking across the market. What is the market doing? When I'm trading SPY and QQQ, I want to know what the top holdings are doing. Typically, if they are selling, we should see selling in SPY and QQQ. Now, it doesn't always work this way, but most of the time it does, right? If the market is selling, SPY and QQQ is selling. So when I say the market, I'm meaning the top holdings of SPY and QQQ. So we have selling, right? We had selling pressure. QQQ has selling pressure. We're opening up again into that big supply area here, right? 428 to 430. Selling into supply, just very, very weak open. Everything is weak, weak, weak. Cannot hold. We're starting to sell. Great. So now we know the macro trend. We know that it is a very, very selly open. What are some big levels that we want to look for? Well, one of the big levels we want to look for is pre-market low, right? Now, I don't need to, a lot of you say, well, I market every single day. That's great if you need that visual. Personally, I just marked it here to show you guys, but personally, my chart's like this, right? I don't have a level there. I don't need it. Why? Because I can see it clear as day that that's the pre-market low, right? I don't need to draw a level to see pre-market low or pre-market high. Why? Because it's just on the chart, right? There's no reason to have to draw it. But if you need to, go right ahead as you're learning levels. So pre-market low is going to be a big one that we're watching here. We took these puts after we started to get some sell. One thing to look for is a break and hold below this pre-market low. Now, a couple confluences we want to look for. Below pre-market low, below yesterday's low would be a higher confluence and a higher probability of a sell-off. Today, obviously from Friday, Friday's low would be all the way down here, right? It'd be very, very low. 420 is really that big level. But today we had that pre-market low going for us where we were breaking down. And the confluence that we had with this break and hold below pre-market low was also across the board selling here as well, right? We had across the board selling a pre-market low breaks from all the top holdings, breaking pre-market low for the most part. Now, great. We have our levels. We're nowhere in supply. We're selling. The market is bearish. We're creating a bearish structure on the day. Now, how would I take my entry here? Well, one of the things we teach is a break and retest. Now, I know I took this as we were breaking just because I have the experience. I know what I'm seeing. But for most of you, what am I looking for? I'm looking for a break and a retest of this level. So we took the entry here. What you guys could have done is take the entry right into this level, right? So we have the breakdown. So this is a very good example of a break and retest, right? So we have the pre-market low, market selling, we break through, we're retesting this pre-market low. And what do we know about this pre-market low? Well, if we break and hold, more than likely there's a higher probability that we have some continuation since it is showing us that we are breaking these lows. So what you could have done is wait till the break, a nice little bear flag here, right back into retest of this level, and a continuation down. So your entry would have been right into this bear flag, right into that retest of these lows here at pre-market low. So again, I'll go over that one more time with you guys from the top. We have that supply that we know of coming into the market today, right? 428, 430 supply. We can see that we were starting to get weak at open, not only in QQQ, but across the board of the top holdings here as well. The market was very, very selly at open. Now we break it down. Okay, where can I take my entry if we have a continuation of this sell? Well, pre-market low is going to be that big level that we'll be watching to take an entry if we break and hold that level. And again, if we have a break and hold a pre-market low and yesterday's low, that's going to be a higher probability. But Friday, right, it's very, very low here. Pre-market low will just be a good confluence for now, since we don't have both of those, but we do have selling in the market. We do have that we're in big supply, and we do have that we're breaking pre-market low here. So now we have our level. We'll wait for that break of that level, or retest of that level to take our entry for a continuation to the downside. So I just want to show you guys this on a blank chart without any EMAs to guide you, right? Because when I'm looking at this chart, this is what I'm looking at. I'm not looking at EMAs or any of that good stuff. They help, but you can see clear as day we're in a bearish structure, right? We're in a bearish structure here for the downside, right? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? That is a bearish structure, right? It's called a bearish trend or a structure. So if you hear anybody talk about structure, that is what they're talking about, either bearish or bullish, right? Lower low, lower high, lower low, lower high. And likewise, here is a bullish structure, right? Higher high, higher low, higher high, higher low, right? Bear or bullish structure appearing when we make that recovery, right? So two different structures that you need to know. Bearish being a lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. A bullish structure being higher highs, higher lows, higher highs, higher lows, and so on and so on. So know these two structures like the back of your hand. When you're reading the chart, look for that type of structure and understand what type of trend you're in. Now let's go back and let's add some indicators, right? Let's add these, right? The BBR strategy. Let's add these into frame, right? And now you guys can see why I made this strategy, why the EMAs work. But again, why I don't personally need the EMAs anymore, but they will help you. So one thing we want to look for when we're looking for these EMAs is the 13 and 48 cross. So we have 13 as this lime green and the 48 as this red line right here. Now, the 1348 cross down, let me go ahead and type this out because I know it'll be a better visual for you guys. 1348 cross down will be bearish. Obviously up is bullish, right? And that's the same for any kind of EMAs you use, right? If you don't use the 1348, people who use the 821, the 921, 1050, whatever it is, it's pretty much the lower crossing a bigger EMA. Likewise, when we get like the 5200 cross, you have a golden cross, lower, higher, right? Lower, higher. So if lower crosses beneath the bigger EMA, it's going to be bearish. If we cross up, it's going to be bullish. Let me show you guys this 48 EMA Yahoo Finance. Just to show my age. August 13th, 2015, right? Why do I use the 48 EMA? Well, back in 2015, I read this article. This article showed me, right? They had a couple, the best moving average crossover strategy, right? And what it showed is EMA crossover 1348.5, right? So the golden cross, right, buying the average 1348 golden cross produced an average 94-day 4.9% gain, better returns than any other combination. So I know I'm showing my age here. That was almost 10 years ago now, but you guys get that question. Why do you use the 1348? Well, in 2015, I read this article on Yahoo Finance, stuck with it, and it has been proven time and time again to be that golden cross, either bullish or bearish. So that's where I got that, right? I got this from this Yahoo article in 2015. That's why I use it. And it's been proven to be true ever since. So that's why I use the 1348 cross and not any other EMAs, because, was it 9 years ago, almost 9 years ago now, read that article. And since then, through time, has been proven to just be my favorite EMA cross, right? 1348 cross down is bearish, up is bullish. Cool, we got that. Another thing we're going to look for is this 200 EMA, right? Likewise, when we use the 200 on the daily, I think the 200 is that first moving average that every single trader learns, right? Above bullish, below bearish, right? I mean, it's very, very simple EMA that everyone learns when they first start trading. And then below bearish. So now the next question you guys are going to have, why do you use the EMA versus the SMA, right? We have the exponential moving average and we have a simple moving average. So why do I use the 200 when I am day trading versus like the 200 SMA, the simple moving average, when we're on like the daily time frames? Well, the exponential moving average is going to show you an average based on the most recent price action. So it's more heavily weighted on the most recent price action. So if we are day trading and we're in these smaller time frames, we definitely want, a moving average that's more weighted on the most recent price action. Makes sense, right? Versus a simple moving average is not as heavily weighted on the most recent price action. But the simple moving average works on something like the daily, because if we're going to take a trade on the daily, we're more than likely taking a swing. We don't need the most recent price action. We just need the smooth, the simple moving average, right? So let's go back to the 5-minute. So great. Now we have a couple of different things going for us on this BBR strategy, right? And if you guys want more information, we have a whole bunch of threads and a bunch of trade recap videos, or you can rewatch this one as well. So great. We have the 1348 cross down will be bearish, up will be bullish, 200 EMA above is bullish, below is bearish. So let's take a look here. We have that 1348 cross, right? We have a cross, we're crossing down. Perfect. That's going to give me a bearish confluence, right? So that's going to be one check mark for a bearish confluence. Below the 200, right? So we're still up above. We were still up above this 200 EMA at open, but then we crossed below it. And look at where this 200 EMA is, right? Look at where this 200 EMA is. And look at what this pre-market low is. Well, we can see that this bear flag, look what happens. We break below this 200 EMA. We have a bear flag and back test right into it. So now we're below the 200 EMA. We have a 1348 cross bearish. So now we have two things going for us saying it's bearish. We also had that break and hold below pre-market low. That is three things going for us that are bearish. right? And then we have a bear flag pattern coming back into this level, showing us that this is a bearish trend. Four things going for us that is bearish. And then we have the market selling off. That is five things going for us that is bearish, right? And then the last thing that you can add to this was we're selling in a major supply. That is now six confluences for you, giving you a high probability setup that we're more than likely going to continue lower versus continue higher, right? So we have six confluences. So a lot of people ask, well, why did you take that trade, or what made you take that trade? These are some things that you need to start looking for and need to start looking at when you take a trade, right? Confluences, right? They're going to be things that are showing you that are adding up to a picture, because all this is a picture, right? Telling you a story. Uh, if there's six people telling me that the building I'm looking for is on the left, more than likely the building I'm looking for is going to be on the left, right? I have six different people telling me that building's on the left. So I'm going to go to the left, right? There's a higher probability that that building's on the left than it's on the right when I have six different people telling me. So think about that when it comes to confluences, right? The more confluences, the better. It's just all a probability game though. So even though we had these six confluences going for us, it still could have not worked out. We still could have bounced here, could have went into high of the day, broke a new high, and could have ran all the way to 435, right? That could have happened. That's the market. It's going to happen. It doesn't mean when you take a trade, nothing is for certain, right? It's not going, even if you have 20 confluences saying that it's going to go this way, it can still not go that way, and you can still lose on the trade. But the more confluences, the higher probability that you have that the trade will work out. So when we're looking for trades, look for confluences, right? Telling me why I should take the trade. It's not just, oh, we broke our low, pre-market low, market selling, I'm going to take the trade, right? It's not just that simple, right? We want to paint a picture. We want to have these confluences that are going to give us an A plus setup. So when I get asked that question a lot, what's your A plus setup? Well, it's going to change every single time. But the more confluences you have that work for you, that's going to be your A plus setup, right? Some people might not use this 1348 cross, right? That might not be a confluence that they use, but I use it, right? So it really just depends on what confluences you use to give you that high probability setup. And this is just something I've created that, works time and time again. Great. So now we're taking a trade. We had that bear flag. We're in it. We're going down. How do I stay in this trade for as long as possible? Well, a couple of different indicators that we can use. There's going to be the 8 EMA, right? So I'll pull these off. I'll leave that 200 up there. But what we're going to use is this 8 EMA. Now we can stay in the trend as long as we are below this 8 EMA, right? So the 8 EMA acts as a trend indicator. Now it can also act as, a re-entry. But for this instance, right, we took this entry here. We can stay in this trade and sell runners as long as we are below this 8 EMA, right? Because we're in puts. As long as we're below this is our trend, we can now stay into this trade until we have a full break and hold over, right? So until this trend breaks, right? So now we're in this trend, and now that trend's breaking. So now let's go back to what I first talked about. Market structure, right? Here's a bearish market structure, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And then what is happening when we're breaking this trend? Not only are we breaking that trend indicator of this 8 EMA, but we're starting to create higher highs and higher lows and higher highs and higher lows, right? That market structure and that trend is is changing. So I hope this starts to make more sense to you guys when I say I don't need these EMAs. I don't need these moving averages to see what is happening, right? I can just read this price action and know what is happening. But as a newer trader or as somebody, who doesn't have enough screen time, these EMAs are giving you a trend, confluences, entries, and exits, right? So that's why I have it. And that's why I created this strategy for you guys so that you can see what I'm seeing using EMAs, right? So I can see all of this without the EMAs, But as a newer trader, it gets very confusing, especially understanding price action, understanding market structure can get very, very overwhelming, especially while everything is moving, right? We're moving up and down because this is BLI, right? Be moving up and down. It can get very overwhelming and you could forget about market structure, all that. So I think this is a clear example showing you guys what is market structure, how to trade it, how to take an entry, how to take an exit, and why these EMAs are good and they are useful if you want to use them, right? They are very useful if you want to use them because it is showing you all these things. Now let's go into the SPY trade that I was taking today. I'm going to go into just something a little bit more advanced for you guys. So same thing, it's going to build off of what I just talked about, market structure, right? Market structure is still going to be building off of the same thing that we used today. So what do we have here, right? We have lower high, lower low. Let me go down to the 2-minute on this one. Gives a little bit better. But we have a bullish structure, right? Bearish market structure. Lower lows, lower highs, lower lows, lower highs, lows, lower highs, lower lows. So now there's going to be a couple things on this that you might not have never seen or understand, or maybe you've seen these and you just are very confused. Well, let me break of structure, change of character. Very, very easy for you. Let me break it down for you. So now when it comes to break of structure, all break of structure means is a break of a lower low in the case of a bearish trend, right? So we have bearish trend here, and here's a break of the lower low, right? It's just a break of structure. We're breaking it, right? Creating a new lower low. Likewise, if we are in a bullish structure, it's just going to be a break of a higher high. So here's a break of structure here, right? Break of structure here. It's just creating a new level, uh, either above a lower high or above a lower low. So we have a lower low here and we created a new lower low. So here's break of structure, right? Don't get too confused with it. It's just a continuation and then a break of the last lower low. That's all it is, or a break of the last higher high, right? Change of character, right? Change of character is a break of the lower low. So we have a break of the lower low. So we have a break of structure. And then the price reverses, right? So now we're starting to get a reversal and it will break the most recent lower high. So since we're in a bearish structure, we have a break of structure here. And then we have a change of character, right? Change of character. We have a break of the lower high here, right? So when you think about it, don't get too confused. All it means is change of character. What does a change of character mean? Well, if our character is a bearish trend, we should have a continuation of it, right? We should be putting in a lower low, lower high, and then another lower low and another lower high, right? We should have that continuation going down, but we don't. We have a change of character. So essentially what the change of character means is we're just breaking this market structure, right? We have the bearish market structure and now we are breaking it to the upside, right? So it is a reversal, right? Reversal and change of market structure. So that is all it is just a change of character. That's what they call it. But really, it's just a change of the market structure. And this can happen from if we're in bullish or bearish. But in this instance, we took SPY calls, change of character, right? So bearish, we have a change of character. We put in a higher high instead of a lower high. We put in a higher high. So now we have a change of character, change of market structure. So now when this happens, this is showing us that, more than likely we'll get a reversal. Why? Because we just broke market structure. It's showing us that the bulls have showed up, showing us that buying is happening, that there's demand here, and they're changing and they're reversing the character, right? We're now entering into a bullish structure versus this bearish structure that we were just in, right? We're changing it. So when we have this break of structure and we have a change of character, what are some things that we want to look for after that, right? So you have the change of character here. What are we going to look for entry? For entry, we're going to look for a fair value gap or a level of demand here. Typically, there's a fair value gap. and demand, right? So we'll be looking for a retest into that. So fair value gap, same thing as an imbalance, right? It's the same thing. Fair value gap is nothing new. No one made it up. It's literally the same thing as imbalances. People have been trading imbalances for decades. So nobody made fair value gap. Whoever you know who it is, but he didn't make it, right? He's not the creator of it. We've been trading imbalances for decades. No one created fair value gaps. It's just an imbalance. That's all it is, right? It's just an imbalance in the market. So fair value gap, I'm just going to change it to imbalance, right? That's all it is. It's just an imbalance. Keep it simple. Don't have to name it something else to sell anything. Just keep it simple. It's an imbalance. So we have an imbalance here. We want to see a retest into this imbalance, into this demand, retest and go, right? So why is this important? Because we changed a character, right? We broke this market structure. We created a higher high. Now we're creating a lower high. And that lower high is now coming back, filling this imbalance, filling into this demand. We held. This is going to be your entry. What I would do is create a stop loss below this level. So probably below this lower low here that we had. So around 491, 490.80 probably would be my stop loss if we're taking an entry here. Why? Because then that would break down below the structure that we just broke. But pretty much what we just came into, we had to change the character. We created a lower high, coming right back into this demand, into this imbalance, showing us, right, should get filled, should get bought up. This imbalance is now filled. It's getting bought up. We have demand here. And now we have a nice solid trend to the upside, right? Pretty much printed to the upside all day after that. So a little bit more advanced there for you. But hope that makes sense to everybody with break of structure and change of character. Now, typically you can see it on the 5-minute, but I like to use the 2-minute. This is where the 2-minute comes into play. And sometimes I'll use the 1-minute to find these break of structures and change of characters as well. I mean, you can see it on the 1-minute here, change of character, coming right into this demand. I'll even highlight it for you guys. Right. Boom. Right. Supply, obviously heavy supply, big move out. For those who don't know supply and demand, we're looking for a balance with a massive, not a massive move, but a big move out of it, right? A big move out of it. We have here a balance, big move. Same like this. This is supply. We have a balance, big move out. Balance, big move out. We have balance up here, big move out, right? So when you're looking for supply and demand, look for those. We have a whole video on it that you guys could check out on Wolves University. But here we go. We have supply, big move out. And then what happens? We're coming back in, move up, coming right back into supply, now turns into demand, demand. And now we have a nice push up there. So hope you guys enjoyed this. Went over a couple different things. We went over market structure, liquidity, imbalances, how to go from the time frames, understanding supply and demand, and even the BBR strategy. So hope you guys enjoyed this. If you have any comments, drop them for me, and I will get back to you guys. But thank you guys for coming out. This was a live trade recap. See you guys next time.